Question 43. The following trial balance is taken from the general fund of the city of Jennings for the year ending December 31st, 2017. Prepare a condensed statement of revenue, expenditures, and other changes in fund balance, and also prepare a condensed balance sheet. First, let's prepare the statement of revenues, expenditures, and other changes in fund balance based on this trial balance. So first, let's have a look at those accounts and see what accounts belongs to the statement of revenues, expenditures, and other changes in fund balance. So it should include revenues. Okay, so we should include revenues into the statement, also expenditures. And then we need to find those other changes in fund balance, including other financing sources, bond proceeds, and other financing sources, transfers in, and other financing uses, transfers out. So those are the other changes in fund balance. Okay, so after we identify those accounts, then we can prepare this statement. And this statement follow certain template, the framework. So we start with revenues. Similar to the income statement, we start with revenues, which is revenues here, 760,000, and then followed by expenditures, like cost, and then which is 530,000. And then revenues minus expenditures is the excess or deficiency of revenue over expenditures. So this is the first level of profit. And then we need to prepare other financing sources or uses, including the bond proceeds. This is the other financing sources, 300,000. And then transfers in, other financing sources, 50,000. And then I have the transfers out. This is other financing uses. It's negative 470,000. So the total other financing sources and uses is a negative 120,000. So the net change in fund balance equals to this excess of revenue over expenditures, and then minus this total other financing uses. A net amount is 120. So we get this net change in fund balance of 110,000. So this is the net change, and then the beginning fund balance is this fund balance unassigned fund balance, and all those so the change in fund balance we got from the statement of revenues, expenditures, and other changes in fund balance are going to impact those unassigned fund balance directly. Okay, so beginning balance is 170,000 and plus 110,000, we get the ending balance of 280,000. So this is the ending unassigned fund balance. So next we need to prepare the balance sheet. So similar to what we did for the statement of revenues, expenditures, and other change in fund balance. First, let's identify those accounts that belongs to the balance sheet. So this is similar to the balance sheet we learned in 2110. It's going to include the assets, liabilities. Okay, so first, this accounts payable is a liability, cash is asset, contracts payable is a liability, unavailable revenues. This is similar to liability, but we put this into a different category. It belongs to the deferred inflow of resources, but it still belongs to the balance sheet. So this is called deferred. And due from capital project fund, this is like a receivable, that's asset. And due to debt service fund, like payables, is a liability. And then investment is asset, and then tax receivable is asset, and voucher payable is a liability. All right, so and then let's prepare the balance sheet. So in balance sheet, we are going to first prepare the assets, including cash, investment, tax receivables, and due from capital project fund, which we just identified here. Asset is due from investment, tax receivable. And then total asset is 720,000. Next is going to be liabilities, including accounts payable, vouchers payable, contracts payable, and due to debt service fund. That's full accounts. We identified here 1, 2, 3, and 4. And then the next big category is the fund balance, which is the unassigned fund balance, and the total fund balance is calculated from the statement of revenues, expenditure, and other changes in fund balance, which is 280. So we need to plug the number from this statement to the balance sheet, 280. Alright, so after we plug that in, then the total liabilities, deferred inflows of resources, and fund balance in total, that's 720,000. Agree with the total assets, so it's balanced. Alright, okay, miss one. This deferred inflow of resources include the unearned revenue identified in the trial balance, that's 40,000, and total liability is 400,000. So add these three numbers together, we got this 720.